Good afternoon. My name is Scott Redler, Chief Strategic Officer at T2Live.com. This is going to be a very fast recap because I want to go back to my desk and trade Apple. Today, Dow close to 22,000. I heard about it all day long, but meanwhile, stocks are definitely doing their own thing. Lots of divergences among sectors, lots of both long and short type of setups, depending where you look. You just have to figure out, what's your style and what you have conviction in. Overall, you take a quick look at the S&P cash, and you will see. Still holding above the reactionary low from last Thursday. You have a pretty tight wedge here. Question is, I guess, will Apple deliver and be up strong and break us above this spot or not? Obviously Apple's more focused on tech, but it also is, definitely could do something to the mood for tomorrow morning. Here we cross above the descending channel, and now we're tight again. So we'll see if we get another gap and go or not. The Qs. Are a little bit weaker, not like falling apart, but remember last time it broke here, it took about 6 weeks before making a lower low to that reactionary low. Not sure what's going to happen this time. We'll see what happens with Apple. I know that we have a little 3-day inside range, but just because, I don't know, feels a little vulnerable to me, I bought the puts for Friday, so we'll see. If Apple's up big, they're going to be worthless. If Apple is a little soft, and you see some movement like you saw with Google or Amazon, it does seem as if we could head a little bit lower, towards, maybe, who knows, the 21-day or the 50-day at some point, in August. It's historically weaker. It feels like we have an excuse to go lower if the market's that tired. Here was your, outside day. All in all, lots of different types of movement. Amazon gave you a few different types of trade real quickly. It did close a little bit higher than this. It's still on the trend line. For some reason, it feels like, you can develop this little inside range, and we'll figure out whether this breaks and we see, more downside to 950 or not. Wasn't an easy trade today. I actually, traded a long and short. It was too, fast to tweet about, but here was your little exhaustion top heading into earnings. This was when we loved it right here when it broke above this nice little setup. Now it needs time. Same way Google needs time. Google's now is more comfortably below the 50-day, which just tells me that maybe, tech's going to need a little bit more time, but until it breaks this, it's still kind of in this range, but it's below the moving averages, not above it like here when you ride it. Okay, so at this point, Google's kind of in the penalty box. Facebook kind of held where it had to inside. We'll see whether or not this holds or not. Okay, I have hard to have a big bet either way, but not falling apart. We had a few trades here today, nothing spectacular. Last time I had a really big move was this pre-earnings move there. So here, it's getting tight. We'll see what's next. Netflix also is getting kind of tight, but seems as if it could be vulnerable. Here is your, your gap from earnings. This is when it broke below this little, tradable trend line into it, and now we'll see, does it hold here? I guess, again, some of it's going to have to do with Apple tomorrow or tonight. We'll see. I did send out a tweet this morning about Boeing. Boeing's been on a tear. In Redler All Access, I'm like, if you're looking to short Boeing versus yesterday's high, it's up 50 to 70 cents. At least your risk is defined. So many people are caught in this pain trade short that this could be the time. And if you did it, I think some guys did. Boeing had a down day. It doesn't look like much, but this topping tail right here gave you something to trade against. So, I did send out also tweet to cover most, and then tomorrow you'll see if you can cover more into this spot. As far as the banks, I wasn't in them, but Citi was my outlined favored one from my private Twitter feed, saying if you need to be in a bank, Citigroup is the best looking one, especially if you can get above and stay above 69, and it did. Hopefully, you were in it yesterday, or you even had some chances to be in it today, and now it closed pretty well. This is trending really nicely as far as the bank's concerned. This was the last time I was really heavily involved in the banks when it broke above this big range, and now it's continuing. Not much to technically to say you don't like here. Bowen, Barron's was positive about it this summer. Tesla's a little weaker. Not much to tell you here. It has earnings on tomorrow. You have a trend line here that it's kind of dealing with. It already broke this one. When we love Tesla, it's when it's above the 21-day going sideways before this little reversal bar here. Same kind of thing, above the 21-day until it reversed here and lost this. So at this point, it's a little technically challenged. So, I'll have no option play going into it. And who knows, maybe it gets a big move down to here where we could, look for a viable spot. But all in all, it's been a great trade. Lots of active moves. Last time, we had one here was the red dog reversal, then again. And then I was looking for a continuation trade, but it failed. So I was done. Now we'll see what happens tomorrow. some are saying this looks like a head and shoulders top pattern, which could happen and could be true. So we'll see what happens tomorrow with earnings. I think some people started to cancel their reservations. Still in the XLE, I did sell a little bit, into strength, which I'm trying to do so I could stay flexible with it. Oil did have a bit of a move lower, which we talked about in the morning call, but after the size of the move in the last week, doesn't really matter much. Here's that descending channel. You can still see a move to here in the XLE, and it's fine. That's your stop. Doesn't necessarily, it hasn't had much of a power to get above this, but it is the XLE and there's not much power there. This is your red dog reversal. Here we got long. I'm down to a little less than a tier 1 for now. Oil did trade lower today, and a lot of people were like crowing about it. But anyway, this is when it was your buy above the 50-day, and now this is where it held the 8-day. It's still above the 8-day, which means it's super strong. Sometimes you trade above a trend line, squeeze some shorts, come back in and test it, and we'll see what happens the next day or so. It still could even come in a little bit further. Look where it came from. Okay, so into this spot, why not take a little break? Doesn't mean it's over, but again, I do think it's fundamentally challenged, but it seems like there are some flows in some of those names. So all in all, I think we're going to know a little bit more tomorrow. We'll see how Apple responds. Here is Apple itself. This is how I'll be looking at after hours. I'm actually in here right now, and I have some orders in near 142, just in case it came out while I was trading. I feel like I could deal with that. If it meets the handset, the iPhone sales and doesn't guide down, and guides actually above revenue, iPhone guidance and earnings guidance, usually they sandbag it. Then maybe you could be a buyer above 154 and 156. All in all, it's smack in the middle. Not much edge. That's why I didn't go with an option trade. But I'm in some puts of the Qs for Friday. So I guess I'm saying that I don't think it's going to gap up and take off, because if that's the case, my Q puts will be worthless, but who cares? It's just a trade. Anyway, I want to get out of here and go see what's happening after hours. This is your momentum level. It's got to get above and stay above this in order for it to be a good after hours trade. If it gets hit because it's in line and they sandbag guidance, see if this 142-ish area holds, which is pretty big support. And the measured move of the options are about 4%. Good luck. I'll see you in the morning.